last financial year, 23-24, the economy grew by 6.1%. In nominal terms, the size of the economy is estimated at shillings 226.3 trillion, equivalent to US dollars 61.3 billion in financial year 24-25, rising from shillings 203.7 trillion, equivalent to US dollars 53.9 billion in financial year 23-24. This is equivalent to US dollars 174.2 billion in purchasing power parity terms. My economists will tell you what that means. 12. Madam Speaker, this growth has broad-based, including this growth was broad-based, including in agriculture, industry, and services like ICT. This was on account of continued implementation of government interventions and sound fiscal and monetary policies that have supported private sector investment. Madam Speaker, the impressive economic performance has been driven by His Excellency the Presidency's commitment and deliberate investment in wealth creation initiatives. I thank His Excellency the President for setting the tone and for providing leadership and direction. Madam Speaker, government has invested over shillings 9 trillion in key wealth creation initiatives over the last 10 years. These include Uganda Development Bank, 4.45 trillion, the Parish Development Model, shillings 3.3 trillion by end of financial year 24-25, Emioga, shillings 553 billion, the Youth Livelihood Program, shillings 207.95 billion, the Small Business Recovery Fund, shillings 100 billion, the Agricultural Credit Facility, shillings 495 billion, the Youth Venture Capital Fund, shillings 12.5 billion, Uganda Women Entrepreneurship Program, shillings 168 billion, the Invite Project, shillings 800 billion, the Grow Project, shillings 824 billion, and Uganda Development Corporation, 1.2 trillion, among others. Madam Speaker, the economy is expected to grow faster by at least 7% next financial year, 25-26, and to double digits at the onset of oil and gas production. The size of the economy is projected to expand to shillings 254.2 trillion, equivalent to US dollars 66.1 billion in financial year 25-26. This will translate into a higher GDP per capita of US dollars 1,000. Let me repeat this. This will translate into a higher GDP per capita of US dollar 1,324 next financial year, compared to US dollars 1,263 GDP estimated for this financial year ending the 30th June this year. Inflation. Madam Speaker, inflation is under control. For the year ending May 2025, the speed at which prices of goods and services rose slowed to 3.4% compared to 4.1% in the same period of the year ago. The slower pace of the increase in domestic prices was due to good export performance and FDI inflows, which led to a stable shilling, increased food production driven by good weather and the parish development model, and the close coordination of the fiscal and monetary policies. In addition, a reduction in the global prices of petroleum products also contributed to the lower prices. The country has been able to benefit from these lower global prices because of the direct importation of petroleum products by the Uganda National Oil Company, UNOC, which removed middlemen in the petroleum supply chain. Therefore, inflation is expected to remain below the policy target of 5% per annum. Now, exchange rates. Madam Speaker, despite global uncertainties, the Uganda shilling has been among the few most stable currencies in Africa. Can I repeat? Madam Speaker, despite global uncertainties, the Uganda shilling has been among the few most stable currencies in Africa. The shilling appreciated by 4% year on year in April 2025 compared to the same month in 2024. Uganda's shilling has been ranked the most stable currency in Africa, according to the International Financial Statistics Division of the IMF. This resilience is due to good export performance, strong inflows of foreign direct investment, and tourism receipts. Now, interest rates. Madam Speaker, the price of money has reduced to an average of 17.7% per year in March 2025 from 18.1% in November 2024. This decline was partly driven by a slight reduction in the Bank of Uganda's reference interest rate and increased lending at lower interest rates to lower risk borrowers. Private sector credit. Madam Speaker, the stock of private sector credit grew to shillings 23.3 trillion in March 2025 from shillings 21.9 trillion in June 2024. This represents growth of 6%. Although this is low, it is expected to increase as private sector activity and household demand continues to recover. Madam Speaker, contrary to conventional economics that government borrowing crowds out private sector credit, Uganda's government borrowing has instead availed cheaper and patient capital to the private sector engaged in wealth creation initiatives. Government borrows from commercial banks at relatively high rates and avails financing to the private sector in strategic sectors at relatively low or no interest rates. Government has provided direct credit to the private sector and household to supplement credit from commercial banks and other financial institutions through PDM, Emyoga, Youth and Women Livelihood Funds, Women Enterprise Support Funds totaling shillings 9.1 trillion, which is equivalent to 3.6% of total domestic economic output in financial 24-25. External sector development. Madam Speaker, total exports of goods and services for the 12 months of March 2025 is US dollars 11.8 billion from US dollars 9.56 billion for the same period in year 2024. Of this, exports of goods were US dollars 9.3 billion for the same period, up from 7.3 billion in March 2024, representing growth of 26%. The top exports include gold, US dollar 3.698 billion, coffee, US dollars 1.83 billion, which alone had an annual average growth of 84.9%. Industrial products, 626.5 US dollars million, cocoa beans, US dollars 410.8 million, milk products, US dollars 285 million, base metals and products, US dollars 230.6 million, sugar, US dollars 186.5 million, fish and fish products, US dollars 107.7 million, maize, US dollars 86.37 million, and other agricultural products like tea, tobacco, cotton, beans, fruits, vegetables, flowers, simsim, sesame, nuts, vanilla, and other grains, giving US dollars 575.9 million. Madam Speaker, this financial year, for the first time in the history of Uganda, coffee exports earnings not only exceeded the $1 billion mark, but are on track to double to US dollars 2 billion per year. While it took the country more than a century to reach US dollars 1 billion earnings per annum from coffee, it has taken just 1 year to double these earnings. This is an example of the kind of economic leap envisioned under the tenfold growth strategy. I therefore implore Ugandans to grow more coffee and, most importantly, add value to our coffee before we export it for higher earnings. Madam Speaker, for the year ending March 2025, the Middle East was Uganda's top export destination, followed by the East African Community, Asia, and the European Union. Uganda recorded large trade surpluses with the Middle East worth US dollars 186.3 million, and the European Union worth US dollars 117.7 million. The main export commodities to these markets were coffee, industrial, and mineral products. Madam Speaker, I wish to note that His Excellency the President, Madam Speaker, I wish to note that His Excellency the President's message and deliberate strategy of increasing the share of manufactured exports in total exports has started producing positive results. New research by the Harvard Economic Growth Lab shows that Uganda has become more complex for its level of income. This means that while earnings from traditional exports like coffee are significantly increasing, their contribution to the total export basket is declining. New products that require more advanced production technology than that expected for our level of income are contributing an increasing share of our total exports. According to the study, in the last 15 years, Uganda added 31 new products to its export basket. Among these are ICT equipment, serums and vaccines, medicines, new pneumatic tires, batteries, gas turbines, electric integrated circuits, transmission apparatus for radio, telephone and TV, measuring instruments, and instruments for physical and chemical analysis, and light manufactured products such as steel, processed food, cement, pharmaceuticals, dairy products, ceramics, and cloth, the country also has an opportunity of harnessing the production of 50 new complex products which are referred to as strategic bets. Tourism and foreign direct investment.